Good morning, guys. It is Thursday, January 11th, 2024. This is Bathrobe Business, more sleep deprived and nappy than usual, but I come with the news. So, I'm excited just because I was right. Your boy was right. Inflation is up, not just for the month, but obviously year to year, because we've had inflation consistently month to month for the past year. So, we'll get to that in a second. Let's talk about the market first. So, the Dow is pretty much unchanged, down 21 points. S&P is down 1.25. Nasdaq is 14.75. Oil is steady at $72.88 a barrel. My favorite indicator, gold, is still below the $2,040 benchmark, that little ceiling that it seemed to have hit a couple weeks ago. It is finally down below it. It's been still hovering in that area. Every day I report that number to you guys, and it seems to still be in that area. It's not at that 2040. For 3 weeks, it seemed to be above 2040. It seemed as if it was a new bench line, but it is still hovering around it. I do want to see that price go down below 2000 because I think it's better for the overall market, as I've talked about in previous videos. Crypto is the news of the day. So the SEC has approved the crypto ETF. I should say the Bitcoin ETF, because then they went out of their way to say we are not planning to approve any other cryptos. Honestly, that surprises me a little bit. I'm not a crypto guy personally. I've got nothing pro or con. I am considering buying into crypto now because of the ETF, simply because I think it's going to be a run on Bitcoin. I think it's going to go pretty high now that it's legitimized. Larger funds can buy into it, etc. Coinbase is looking to benefit greatly from this because they hold a ton of crypto, and they're probably going to be making a lot in fees from this change in the SEC ruling. Robinhood as well. I think Robinhood also holds a lot of cryptocurrencies. But yeah, now that it's pretty much legitimized, I anticipate there's going to be a large jump in Bitcoin simply because there'll be a buying frenzy. Granted, I'm not a crypto guy. I don't actually know how that works. I know that crypto doesn't operate off of standard economic rules, shall we say. It could be that because it's based more as a digital commodity, it's actually not going to change much in price depending on the volume of demand, shall we say. So that's something for me to research. I don't know that answer, but I think it's something that could happen. But the interesting thing is they are not approving other coins, other cryptos. I would have thought that Ethereum would be on the table. Personally, of all the cryptos, I like Ethereum the most just because I don't see Ethereum so much as a commodity quite like Bitcoin. Bitcoin tries to be a digital commodity, right? It's unchanging, it's monolithic, and stranger enough, we still don't know, quote unquote, we still don't know who created it, who created the concept of Bitcoin, which is furthermore why I'm a little surprised the SEC is approving that and not approving Ethereum, because we know who made Ethereum, a young genius by Vitalik, what is his name? Vitalik Bertram? I cannot remember his name now, but we know who he is. He's been on the Lex Friedman podcast. He's a very smart guy. I think he was the recipient of the Don't Go to College Fund that, oh my God, my brain is breaking, that the founder of PayPal did. I escaped that. Everyone's name is escaping me this morning. But anyway, he created Ethereum, and Ethereum, I think, is a very interesting product because you can actually have contracts onto the blockchain. You could have images on the blockchain. A lot of the NFT frenzy a few years ago was on Ethereum's platform. I feel like Ethereum is a very interesting product, and I look at it more as a product than I do as a commodity. So I'm surprised that they are not opening up to it, seeing as how we know who built it. It's got more centralization. It's not as decent. Obviously, it's a blockchain-based currency, but it is more centralized than Bitcoin. Bitcoin is fully decentralized. So I would have thought that the SEC would be more interested in a centralized currency simply because of regulatory reasons, but so far they are not exploring that. So we'll see. That's a very interesting story that's one to develop and really change the market. Honestly, for many years, I thought Bitcoin was more of a fad and that sooner or later the bubble would pop, but I don't think that anymore now with the legitimization of it. And like I said, I'm not against Bitcoin. I'm not pro Bitcoin. It was always just kind of out there in the ether. And now this kind of does change the game. We're going to be seeing people retiring with their Bitcoin funds probably within a few years. So yeah, next story. So I will get to the major story. Inflation, inflation, inflation. So I was right. Inflation is up again. Okay, so I am happy, and I know I shouldn't be, but it's always satisfying to be right when everybody is telling you you should not be. I was right about the interest rates a couple weeks ago, and I'm right about this. So yesterday I told you guys, I've been saying this for weeks, CPI data is going to be up. There is no way it's not going to be up. Seeing everything we're seeing in the market, rise in prices across the board, rises in wages, rises in core CPI last month. Remember that too. Core CPI is much more sticky than CPI. CPI looks at a lot of goods and services, but core CPI is based more off of wages. And core CPI was up. Well, if your employee wages are up, what are you going to do? Raise prices. So they were anticipating a smaller rise, but the consumer price index rose 0.3% in December. That may not seem like a lot, but this is just for the month of December. From November to December, it rose 0.3%. And it's now pushed the yearly inflation rate up to 3.4%. So instead of the 2% where we need to be per year, we are at 3.4. We are 1.5% higher than we need to be. Why does that matter? Because that means the Fed is probably not going to be cutting rates anytime soon. It needs to lower that CPI. Now, it doesn't mean they're going to be raising prices, raising interest rates. I could go either way on that one, simply because raising interest rates again does have a lot of, while I support it, I think it does have a lot of other issues as far as debt, as far as U.S. debt. Remember, every time they raise inflation rates, bond markets go up, and that means the U.S. government owes more in their interest rates. So I don't know how that's going to happen. That's data that is way above me, and that is something the Fed is going to determine. But I do think that means that there is not a rate cut coming anytime soon, especially when you consider the next story I'm going to be talking about, again about the Red Sea. We have inflationary pressure all over the world. Remember, we are still a global economy. We can say that globalization is dying down. It's not as aggressive as it was years ago, but it is still very much a global economy. Our parts, our pre-manufactured goods are also coming overseas. And so if you've got global inflation pressure, you're going to have it rises in inflation across the board. I'll circle back to the inflation in just a second, but I'll move on to the next story because it does relate to it. So more issues in the Red Sea, as a ship was actually hijacked in the Red Sea and supposedly taken towards Iranian waters. I'm going to put an asterisk on that and put that to the side for a second. Maersk CEO Vincent Clerc said that it is unclear whether the Red Sea trade would resume in the next days, weeks, or months. And then major players like Ikea are already reporting that they're going to be having delays. In addition, Germany is also having a wave of strikes with their farmers and their train unions. So there's very little movement happening in Germany. And Germany is the powerhouse of Europe. So you've got the powerhouse of Europe where movement has stopped. And you've got the Red Sea, one of the main transportation hubs, where movement not quite stopped, but nearly stopped. And so this is a powerful inflationary pressure that we're looking at worldwide. And that's in addition to everything we're facing here in the United States. That's in addition to our rises in wages, our rises in commodities, et cetera, et cetera. So this is a powerful pressure that we're facing, is why we're seeing higher CPI and why I don't think the Fed is going to be cutting. Now, why I put an asterisk on that previous story about the hijacked ship in Oman, near Oman in the Red Sea, I'm going to put my little conspiratorial hat on because there's something here that just doesn't seem right with how quickly conflict is escalating in this region. I don't want to get political. I don't know all the information, but I think that's also part of it, is we're not getting a lot of information on what's truly going on in that region. We're not getting good reporting. We're not getting good independent reporting. We're getting very mainstream corporate reporting. And that's why I think there's more to this story than we actually know as far as the conflict of who is the bad guys and who is the good guys. As I've said before, the Houthis have been under assault by Saudi Arabian forces for almost a decade now. And there's a lot of conflict in that region that is much more complicated than point to the good guy, point to the bad guy. So I think there's a lot of information that isn't coming out, but I'm going to keep reporting on the story because it is kind of a major story. It has major applications to the business sector worldwide. I'm going to circle back to the inflation again in just a second. I'm just going to report these next two stories. Google is laying off hundreds of people in its hardware voice assistant teams. This is again in addition to the fact that Amazon laid off workers yesterday. So layoffs in the tech sector are continuing, right? They're not accelerating, but they're still continuing even after waves and waves of layoffs in the tech sector in the last year and a half. And the Biden administration has announced $623 million in new grants to build EV chargers across the U.S. That's a very good infrastructure bill. I'm not pro or against Joe Biden. I'm kind of agnostic when it comes to politics these days. Don't let the communist flag fool you. I'm not quite a communist. I was born there. That's why it's there. I sometimes get questions about it. I was born in the former Soviet Union. And that's actually my face on the flag. But this is a pretty powerful infrastructure bill that is probably going to drive EV sales for the next several years. There's other stuff happening in EVs as well. So for years, there's been issues with standardizing chargers because certain chargers aren't adaptable to others, like Ford's EV charging stations. Ford EVs need different charging stations than Tesla's and vice versa. That's becoming more and more standardized. Everybody is moving more or less towards Tesla's system of charging, and Tesla is opening those up to allow for others to charge at their stations. So this is going to be pretty standard probably within the next 10 years as all EVs become standardized. I would imagine with the Tesla platform, simply because Tesla is the biggest name in the market. And this is going to further probably drive that because I'm sure they're going to try to have a standardized method of charging across these stations that they're going to be building. So this is just a grant, right? Nobody has taken this up. This is just an announcement. I think this does come from funds from the CHIP Act. But this is a very powerful infrastructure bill that I think is going to be changing America's landscape for the next 10 years. I don't think this is a minor story. But yeah, just coming back to inflation. I'm circling back. Sorry, I'm jumping around a little bit. But yeah, I think that this is going to mean no rate cuts anytime soon. I would say not for at least the next 2 quarters. Possibly during the summer months if inflation starts to cool. I don't think it's going to change rapidly. I think we could start seeing I think we could be down to 3% inflation in 2024 by the end of the year. And that is a cut of almost 0.5%. That's not small. But I think if you were to take your foot off of the brake and cut interest rates, I think that would drive inflation way, 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 way up. And so that's why I think this is not going anywhere. We're going to be staying at the standard level for a while. And if for some reason the economy would start to boom or accelerate or start doing better, you would see higher interest rates coming in addition to where we are now. That's pretty much it. I kind of rambled. I kind of ranted. I got to get to work. I hope you guys have a great day. I will see you tomorrow.